Hello and welcome to our channel. Today we're going to talk about how to buy real estate with little or no money based on the teachings of Robert Kiyosaki. Robert Kiyosaki is a world-renowned author, entrepreneur, and investor who is best known for his book, Rich Dad, Poor Dad. In his book, Kiyosaki emphasizes the importance of investing in real estate to build wealth and achieve financial freedom. However, many people are discouraged from investing in real estate because they believe they need a lot of money to get started. But the truth is, you can buy real estate with little or no money down if you know what you're doing. The first step is to know what kind of income you're working for. Investing in real estate can be a profitable venture, but it's not as easy as just buying a property and waiting for the cash to roll in. To be truly successful in real estate investing, you need to understand the kind of income you're working for. According to Robert Kiyosaki, the investment rule number 1 is to always know what kind of income you're working for. However, real estate investment can be a complex process that requires planning, preparation, and perseverance. It's not surprising for beginner investors to make mistakes that can be costly and lead to disaster. That's why it's important to leverage the experience of others. To maximize your returns in real estate investment, it's essential to build a team of experts who can provide valuable insights, influences, and opportunities. Some investors may believe they can retain more profits by doing all the work themselves, but this isn't a strategy for long-term success. By putting together a team of property managers, real estate brokers, lenders, attorneys, and accountants, you can multiply the time and talent you have at your disposal, essentially without limit. Having the right partners can not only increase your returns on an investment venture, but also provide scalability to your real estate portfolio over time. So, whether you're a beginner or an experienced investor, it's crucial to identify the importance of building a strong network and leveraging the experience of others to achieve success in real estate investing. The second step in buying real estate with little or no money down is to understand the real estate market. According to Robert Kiyosaki, you need to know the difference between a buyer's market and a seller's market. In a buyer's market, there are more properties for sale than there are buyers, which means sellers are more willing to negotiate and accept lower offers. In a seller's market, there are more buyers than there are properties for sale, which means sellers can demand higher prices. In his book, Rich Dad's Guide to Investing, Kiyosaki writes, "As a real estate investor, you have to keep an eye on the overall economic trends and take advantage of those trends to make money." He also emphasizes the importance of understanding the market and the specific neighborhood you are investing in, as well as networking with other investors to stay informed and educated about market trends. The next step is an important key in real estate investment. The key is to find a motivated seller who is willing to finance the deal. This is known as seller financing or owner financing. With seller financing, the seller acts as the bank and provides the financing for the purchase of the property. This can be a win-win situation for both the buyer and the seller. The buyer gets the property without having to come up with a large down payment, and the seller gets a stable, steady stream of income from the buyer's payments. However, owner financing can have its pros and cons. One of its pros is the increase in flexibility. Owner financing allows for more flexibility in negotiating the terms of the deal between the buyer and seller. This can lead to a mutually beneficial arrangement for both parties. Another pro is faster closing. Since there are fewer parties involved in an owner financing deal, the closing process can often be faster than a traditional sale that involves a bank or other lender. Third is the opportunity for those with poor credit. Buyers who may not be able to qualify for traditional financing due to poor credit or other factors can still potentially purchase a property through owner financing. Lastly is having more potential buyers. This means that offering owner financing can expand the pool of potential buyers for a property, which can increase the chances of a sale. Now let's talk about its disadvantages. First, there is a higher risk for the seller. Since the seller is essentially acting as the lender in an owner financing deal, there is a higher risk of default and non-payment on the part of the buyer. Next is having less cash upfront. With this, sellers who offer owner financing may receive less cash upfront than in a traditional sale, which can affect their cash flow and ability to invest in other properties or ventures. Third is the potential for legal issues. If the terms of the owner financing agreement are not properly structured and documented, it can lead to legal issues down the line. Last is the limited buyer pool. While owner financing can expand the pool of potential buyers, it may also limit the pool to those who are willing and able to enter into this type of arrangement. This can result in a longer time on the market and potentially lower sale price. The second step in buying real estate with little or no money down is to use creative financing strategies. Robert Kiyosaki suggests using techniques such as seller financing, lease options, and private money lending to acquire real estate without using your own money. The key is to use other people's money, or OPM. This involves finding investors or lenders who are willing to provide the funding for the purchase of the property. You can use your network of friends, family, and business associates to find potential investors or lenders. You can also look for private lenders or hard money lenders who specialize in real estate investing. Let's further discuss the creative financing techniques you can follow. First are the lease options. A lease option, also known as a lease purchase agreement, is an agreement in which a buyer rents a property for a set period of time and has the option to purchase the property at a predetermined price before the end of the lease. This can be beneficial for buyers who may not have the funds for a down payment or who want to test out the property before committing to a purchase. However, sellers may charge higher rent or set a higher purchase price to compensate for the risk of the buyer not following through with the purchase. Second is the seller financing. Seller financing, also known as owner financing, is when the seller of a property acts as the lender and finances the purchase for the buyer. This can be beneficial for buyers who may not qualify for traditional financing or who want to negotiate more favorable terms. However, sellers take on the risk of the buyer defaulting on the loan and may have to foreclose on the property to recoup their investment. Third, subjective financing. Subjective financing is when a buyer purchases a property subject to the existing mortgage. This means the buyer takes over the mortgage payments without obtaining a new loan. This can be beneficial for buyers who want to take advantage of the current low interest rates or who may not qualify for a traditional loan. However, the buyer is responsible for making the mortgage payments, and if they are unable to do so, the property may be foreclosed on. Fourth is wholesaling. Wholesaling involves a distressed property and getting it under contract at a discounted price. You can then assign the contract to another investor who will buy the property from you at a higher price. This allows you to make a profit without actually buying the property. Flipping involves buying a distressed property, fixing it up, and selling it for a profit. This requires more upfront capital, but it can be a lucrative investment strategy if done correctly. Lastly, hard money loans. Hard money loans are short-term loans that are typically used for real estate investment purposes. They are issued by private lenders and are secured by the property. These loans can be beneficial for investors who need a quick financing or who may not qualify for traditional loans. However, hard money loans typically have higher interest rates and fees, and if the investor is unable to repay the loan, the property may be foreclosed on. Robert Kiyosaki says in one of his books, Rich Dad's Advisors, The ABCs of Real Estate Investing, creative financing is not a magic formula. It is a simple way of looking at the many options available to finance a property. It means being creative, looking outside the box, and discovering financing alternatives that are not immediately apparent. Another factor in buying real estate with little or no money down is to network and build relationships with other real estate investors, lenders, and professionals in the industry. According to Robert Kiyosaki, building relationships is key to finding great deals and accessing the resources you need to succeed in real estate investing. In his book, The Cash Flow Quadrant, Kiyosaki highlights the value of surrounding yourself with successful people who can provide guidance and mentorship as you explore the real estate market. He also expresses the importance of due diligence and understanding the credentials and track record of individuals you are considering doing business with. The last important factor to consider in buying real estate with little or no money down is to be patient and persistent. Real estate investing is not a get-rich-quick scheme, and it takes time and effort to build a successful real estate portfolio. Real estate investing is a long-term game, and you need to be patient and persistent to achieve success, says Robert Kiyosaki. You need to be willing to put in the time and effort to find the right deals, negotiate the best prices, and build relationships with other investors and professionals in the industry. In conclusion, buying real estate with little or no money down is not only possible, but it's a great way to get started in the world of real estate investing. It requires creativity, knowledge, and persistence, but the rewards can be immense. Remember, always know what kind of income you're working for and use creative financing strategies like lease options, seller financing, subject to financing, and hard money loans to your advantage. But also, be aware of the risks and drawbacks of each method. Networking and building a team of experienced professionals can also be a game changer for your real estate investing journey. By properly leveraging the knowledge and experience of others, you can multiply your resources and grow your portfolio over time. Finally, don't forget the importance of due diligence and research before making any investment decisions. Always take the time to thoroughly evaluate a property and its potential before committing your time and resources to it. Research is very important before you make any decisions. So whether you're just starting out or are a seasoned real estate investor, remember the tips and strategies shared by Robert Kiyosaki and other experts in the field. And always be willing to think creatively and outside the box to achieve your financial goals through real estate investing. Finally, remember Kiyosaki's statement in The Business of the 21st Century. It is not about real estate, gold, stocks, hard work, or money that makes you rich. It is what you know about real estate, gold, stocks, hard work, and money that makes you rich. Ultimately, it is your financial intelligence that makes you rich. So start there. If you found this video helpful, don't forget to like and subscribe to our channel. Leave your thoughts in the comments section, and as always, thank you for watching.